Well, ladies and gents, Warner Brothers had their quarter two earnings call, and it was really interesting. One thing which came out from it, and we'll take a look at some other bits and pieces as well, but one of the things that came out of it was a Warner Brothers Discovery executive, not David Zaslav, said that the WGA and SAG-AFTRA strikes have saved the studio $100 million. I mean, you're not going to be winning any friends by saying that. It is quite funny because it's kind of a... It doesn't make any sense. It might have saved you money, but that's only because it's not costing you money. And in the long run, it will cost you money. So I thought this would be an interesting gateway into our discussion of the Warner Brothers quarter two earnings call. We covered this last night on my podcast, actually, the Hcast, which if you've missed it, I do it twice a week, Tuesday and Thursdays, and they go up on the second channel, which is linked in the description box, Missed H Reviews Live Archives. Go check that out. You might really enjoy it. But anyway, the CFO, Gunnar Wiedenfels, basically, and it is basically bragging, that the studio has been saved money by the strikes. Somewhere in the, and I quote, low $100 million range. Now, no one needs any reasons to hate David Zaslav anymore, because he seems to be the target of ire from everyone. Bafflingly so. But he's actually done a really good job, because then he chimed in and was like, no. You know, we're hopeful we can get started again, and we need everyone on board, and it all needs to be resolved, basically. So he sort of squashed that nonsense real quick before it began. He said, and I quote, "We're in the business of storytelling. Our goal is to tell great stories, stories with the power to entertain, and when we're at our best, inspire with stories that come to life on screens big and small. We cannot do any of that without the entirety of the creative community, the great creative community, without the writers, directors, editors, producers, actors, the whole below-the-line crew. Our job is to enable and empower them to do their best work. We're hopeful that all sides will get back to the negotiating room soon, and that these strikes get resolved in a way that the writers and actors feel they are fairly compensated and their efforts and contributions are fully valued. I think all of us in this business are very keen to figure out a solution as quickly as possible. We are in some uncharted waters in terms of the world as it is today and measuring it all. And so I think, in good faith, we all got to fight to get this resolved, and it needs to be resolved in a way that the creative community feels fairly compensated and fully valued." Now that was David Zaslav's remarks, which pales in comparison to what Bob Iger said, where he's just like, pretty stupid time to strike, actually. Alright, cool. Anyway, there was a whole host of other good things that sort of David Zaslav got involved in, basically, in this call. And it was interesting. So there's a lot of free cash flow. Now, they've already done their sort of write down on debt that they wanted to clear. It was like over $1 billion or something like that. And now they're on the way to like $5 billion in savings, which is crazy. And they have a lot of free cash flow, which is a lot, an awful lot, especially for this company. You know, they've taken massive L's recently, and obviously they have. I mean, The Flash was a huge box office failure, massive box office failure, but they've done really, really well. And in terms of this, so they, posted, share losses 51 cents. It's not actually true. They've been up now, or they were yesterday. Now, apparently revenue dipped 4% from the prior year quarter to come in at 10.358 billion, a shade less than the street's numbers. Ditto streaming subscriber numbers, which showed a loss of 1.8 million subscribers and a tally of 95.8 million. Now, it's interesting. I think a lot of that is because they retitled HBO Max to Max. I think some of that did actually make people leave, as well as a whole host of other things, be it people's income. But one thing which is a big deal for this industry moving forwards, for Warner Brothers as a whole, is that they're going to be adding news and sports. News and sports to HBO Max, or Max now as it's called. That's great. That's really, 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 really good. That's not a small thing. That's huge. That is absolutely massive. You know, that's one of the things which... so Disney Plus lost a bunch of subscribers earlier in the year because they lost the cricket. And obviously that's India. And, you know, it's quite a big thing. Like, quite a big thing. So this is really, really interesting that they're going to be doing that. And that will make a lot of money, basically. And it's not just that either. So this free cash flow is a big deal. Free cash flow was by far the standout financial metric, reaching $1.7 billion. 1.7 billion is more than double the amount that they had a year ago. That's brilliant. So that number, plus diminishing streaming losses and a revised outlook for $5 billion in cost savings streaming from the merger of Warner Media and Discovery, up from prior guidance of $4.5 billion, sent Warner Brothers Discovery shares up slightly in pre-market trading. That's really, really good. They've done great. Now, look, at the end of the day, you know, there has been company debt, sure, but it ended the quarter at $47.8 billion with a leverage ratio of 4.6 times trailing earnings. We remain bullish with respect to our delivering story and expect to be comfortably below 4 times levered by the end of the year and at our target of 2.5-3 times gross leverage by the close of 2024. They're well on their way. Everything they say they're going to be doing, they keep doing. But yeah, management had been signalling that the Max rebrand unveiled in the spring would result in churn as a number of subscribers to both HBO Max and Discovery cut their subscriptions. Apparently for the combined service, but that's interesting nonetheless. Not a whole lot else really to go into here. They've just done really pretty well, despite quite a lot of issues as well. They also, in this earnings call, reiterated their Good Gaming division, because they're one of the only studios that makes their own games now. They obviously had that huge success with that recent Harry Potter game, Hogwarts Legacy, wasn't it? And then, so that's a huge deal. And then just leveraging all of their assets, which they said that they were going to do. The take home from this is, as a businessman, David Zaslav is quite shrewd. If he says he's going to do something, he generally goes out and does it, and they have done it. So it's interesting. It'll be fascinating to see what happens moving forwards. But there's a lot of movers and shakers in the industry now, and Warner Brothers could once again come back on top. They also noted, because I had an individual of my panel on the Hcast who was on this call, they noted that they're going to be essentially mining content and releasing volume, quantity, rather than high budget films. They're going to be focusing on quantity of films, which actually puts it in a really good position, because, you know, those companies that don't have massively high budgets, they have a high turnover of product, but their profit margins are higher, like Blumhouse, like A24. And a lot of these companies you look at favourably, especially A24, generally speaking. So I think we'll probably get a rise of short, you know, horror type films, and I think that'll be quite good, and I think the market will push in that favour. Superheroes are genuinely dying, and just release 1 or 2 a year as a tentpole property. Why not? I think that's a good plan. But there you have it. What do you think? Let me know down below. Cheers, guys. Take care. Bye-bye now.